Another day, another miraculous Tom Brady come from behind win. Not just any day, but the day that I also finished my second master's degree. So pretty good day overall. But this evening we're going to get into the QYLD again. I didn't think I was going to keep doing videos on this, but I'm going to at least do one more because I just want to go over the last couple months payouts that I haven't covered, and I'll discuss some strategies for what you might want to do with this fund because it's still a very popular, very trending fund online. So let's get right into it. I'm going to share my screen here, and then we'll go to Yahoo Finance, and we'll go over how the fund is doing, and then I'll just show all my dividends. So let's see here. Okay, so looking at Yahoo Finance, so the global NASDAQ 100 covered call ETF, also known as QYLD, is at $16.52 as of today. So it's been dropping most of the year from its peak, and it's even dropped since August. It's dropped about $2, and the market overall got hammered today. But the QYLD is maintaining a 12.5% or 12.53% yield. And we'll go to historical data here and look at the past 2 months that I haven't covered. And then I'll show you all these dividends that I'm, paying all this tax on, because that's the only point to dividends, right? Just pay tax. Not quite, but we'll go over that. Okay. So the ones I didn't cover were October and November. It hasn't paid out for December yet. And I'm only going to show you in one account because I've actually moved other accounts around for my new job that I started. So it's been kind of chaotic, but things will settle out here in another month or so. By the new year, things should settle out. So October 24th and November 21st, it paid almost 16.5 cents per share. So in 3 months, it hasn't fluctuated that much. And then I will go into, let's see here, I will go into the E-Trade. And you can see, do I hold it? Yeah, I hold a small, I hold 24 shares of it here. So 396 in dividends there. And you can see some of the other funds I'm in here. The biggest one, Verizon, almost a $400 quarterly dividend. So, that's pretty good. But Verizon has tanked quite a bit. So, and then I'll go over this one here. I think I'm only getting like $11 in this one. Oh, this is a new one, so that doesn't have any statements yet. But this one, let's see here. Oh, this is a little bit different here. Why is this one not? This should still. Let me go. Oh, there we go. So let me filter by dividends, our favorite topic. Excuse me. Okay, so you can see all these nice dividends I'm getting here. And where is the QYLD? Right here. So November 30th, $11.54 on 70 shares. The other one, the one I've been showing this whole time, I'm not going to show because that one's actually at Ameritrade, which is over here. But for some reason, I guess I'm still learning their format because the dividend is not showing up in this one here. So, oh well, I'll just focus on this one for today. It's part of the reason why I haven't done a video on this in so long. So actually, the October dividend for the QYLD, $11.38 paid out November 1st. And then at the end of the month, at the end of November, it paid out another $11.54. So it certainly wasn't my biggest dividend in this account, but it certainly came in, and it certainly is coming in every month still. But yeah, you can see the other dividends that come into this account, and this one, it's at least holding steady. Now the point. Why would you continue to hold this? So you can see fundamentally, it keeps dropping. You can see you can draw almost a straight downward slope from the start of the year to now. It's down like 16.5% for the year overall. So why continue to hold this? Well, funds like these, if they keep a high payout coming in, I tend to hold on, um, just because I at least want to recoup my original investment in dividend payout. And that may not make sense, but if you've got like what I call, or what economists call, a sunk cost into the fund, instead of selling it and incurring that loss, which you could do because that gives you a tax benefit to offset all those taxes you're paying in dividends. Um, you could do that, or just keep writing it out and just letting the dividend come in. So at this rate, if we'll just take 100 shares for example. If it's paying like 16.5 cents a month times 12, it's paying about $2 a year off of 1652. So that's about a 12% payout. So if you take your original investment, say you started with $100, and then 12% a year, how much time would it take to double? This is if you're reinvesting. Year one, you'd have 112. Year two, 125. Year three, 140. Year four, 157. Year five, 176. Year six, 197. So by year seven, you're at 221. So then you would double based on just reinvesting the dividend. So once you've doubled, the 121 out of the 221 is all the house's money, so to speak. So then you've gained your, well, I'm sorry, 21 of the 121 you gained because you made your original investment back. So say in the unlikely event, say this fund just completely went down to zero, you at least get your money back. And that's not the most encouraging thing. You may think that, well, what's the point of that? This was supposed to be, this highly touted, high dividend paying fund. Well, it does underperform. So at this point, I wouldn't put a lot into this, and I would hold this for income, but not necessarily retirement income. If you're in retirement, I would not hold this, and rely, because the thing is, as the fund price drops, so too will the payout. And let's go back to historical data to cross-examine that claim. So I'm going to go back to, because this has been in existence for I think almost 10 years now. So I don't want historical prices. I want, um, that's funny. Kaplan offers a financial education plan. You don't need that. Just watch Jeremy's videos, right? Just kidding. Or watch mine. I don't know though. I may mislead you because I talk about dividends so much. Boy, and there's a lot of people online that are down on the dividends. Um, like I said, I like the dividends. And let me explain something here. So I understand that dividends come directly out of the company's balance sheet, and it's almost like the company can't find anything better to do with them. But the way I look at it, when you buy and hold, or hodl, depending on what the stock does, when you buy and hold, you're not going to cash anything in, or you're not going to reap any gains until you actually sell that stock. So you're going to be waiting forever. You're investing today and you're waiting forever, which you're doing in your retirement accounts anyway. I'm only talking about doing this in like a small portion of your overall portfolio. But at least with dividends, you are getting the money coming back to you. You're getting a payout. You're realizing a payout today instead of waiting 40 years to ever touch it. And I know you get taxed on it, but guess what? When you pay taxes, it means you're making money. That's not a bad thing, you know. So anyway, what I want to show you here, why this would not necessarily be good for retirement, because you can see the dividend payout has actually dropped, and this is why a lot of people are getting out of it. And I totally understand. That's why I'm not hugely like as enthused about it as I was in the past. But I'm still in it. So what the purpose of this video is, this is just basically managing the position until you've recouped your original investment, and then possibly just get out of it. But then again, if you only put like, if you take 100% of your portfolio, if you only put like, I don't know, 5% or less into it, unless you really need the money, why get out of it? Yeah, there could be better investment opportunities, but find those with the other 95% of your portfolio. Why bother? And this is what I never understand about people, is that why you'll focus on one area that's losing, and you'll think, oh, I need to sell that. But you could have one that's running and gaining over here, and you completely ignore it until it starts dropping. And then all of a sudden it starts dropping and you're focused on it, which I never understand. I never understand why we as a society, for some reason, the negativity outweighs the positivity in our mind. And that mindset as an investor, I would say needs to change. So let's see how we're doing on time here. Um, okay, I've got some interesting comments here. This is probably a bot, but I've got one of my key dividend fans here. Okay, let's see. PDI and PTY. I'll have to look into those. iShares CC ETFs. I guess we could look into those. I've beat up QYLD enough here. Let's see. I'll do one and then I'm gonna end the video because I don't end this. I'm already over 10 minutes. So let's see here. iShares CC ETFs. You tend to find good ones. So okay, that one's not coming up. What's PDI? Oh, PIMCO. Yeah, they're one of the big fund companies. And then PTY. Let's see here. PTY. Oh, they're both PIMCO. Let me just look at one, and then I'm gonna end the video. I'll do another video where I do like frequent fan requests, and I'll make notes of all these and go over them all. So let's see. Okay, 10.88%. That one actually does look like a decent alternative to the QYLD. Let's see what other one you said. Oh, you gave me three more, but I don't have time to look into those right now. I will look into, let's see, PDI, and then I'm going to end it. PDI. Okay, let's see. This one is, oh, $20. So I'd probably stick to the first one, but this is a 13.37%. So great finds again, but I'm going to end it there. Thanks so much for tuning in. Please remember to like, comment, and subscribe, and keep an eye out for my next videos. Now that I'm done with my master's degrees, I'll probably go all in. Now I can actually, like I said in the community post today, the real work begins today. So now I'm going to be all in on YouTubing. So thanks again for tuning in. Take care.